Hi everyone. Let's put my camera back on. Welcome, welcome. Well, between the Ryder Cup and football, I just want to congratulate all of you that showed up because it's a big, big day of all kinds of interesting sports. Well, I just messed that up, didn't I? Let's fix this again. How is everyone? We had a lot of things happen last week, and so I have a three-way bar chart set up because I want you to look at the interesting movement of volume. Now, so today we're gonna, all right, let's take that off with our OCO brackets. And we can have ourselves up there. And so what we are looking at coming into this week is something really very interesting. Now, I have a lot of data I want to go through, but also I want to talk to you specifically. I'm looking at the chat and really want you to engage in terms of what's going on. But today is going to be something that I want to give you a feel for, to have a cautionary tone just for the next little bit. So let's get to it. So, good news. The fourth quarter that we are getting ready to step into, which is 2 days away, is the strongest quarter in all the markets statistically across the board, bar none. It is usually the most aggressively bullish quarter of the year. So we know that as this little bit unwinds, it's still going to be buying opportunities for us from a longer time frame perspective. That being said, we've got 2 days left before the end of September, and the end of September marks the end of the quarter rebalancing event. So it's the end of the month, end of the quarter. Now, I've been around. I've been trading futures for 20 years, and I've been in the markets for longer than that. And so I've been super fortunate to have a lot of good friends in the futures trading space that have been around since the very beginning of the CME. And so one of the things that we've talked about many times is how careful you have to be trading in the last days of the month, because things flip around as a result of big money moving portfolios around. So a couple of things are happening. One, we've got liquidity leaving the market just a wee bit. We can see that from the direction of Bitcoin. So Bitcoin sits as one of those instruments that when things are really hot and heavy, it's the first one to really pick up the pace and run. The fact that it's fading, and it's fading and continuing to fade on volume that has been bigger until about, the 10 to 2 p.m. 4-hour formation, and that is Eastern time. 10 p.m. to 2 p.m. Eastern time on Friday, where we had a great big flush of bullish pressure, but the following candle could not hold it up. So I'm a big fan of trading Bitcoin, micro Bitcoin on our TopstepX platform. It is a great vehicle to trade, and it's been doing a lot of very interesting things. But one of the things it's doing right now is really, it's in pure decision mode. And so how do we know that it's in decision mode? And why did I choose to talk about it in the first place before jumping to many of the other instruments that we trade? And it is this. What the traders have said is, hey, how about we accumulate inventory right around this region from a low of 109,000 to a high of 110,700. So we've got about a little bit over $1,000 of motion inside of there. But let's remember the number one thing. What are markets created for? And of course, our absolutely incredible John Hoagland always tells us the following. The market is created to facilitate trading. So what does that mean? That means that this notion of inventory accumulation tells us, hey, traders are going to be buying or selling in a certain pocket of price action where they agree, and then it's going to be fisticuffs to see who wins the game, because we will either distribute and move to the next area that the traders have said, this is a pretty good accumulation zone, between 114 down to 111. That's on the upside. On the downside, where they're going to head to is the last accumulation zone, and we really can't see it very well off of this particular instrument, but it really is down here between 105 and all the way down to 97, right? With a midpoint right at about that 101 area. You might say, Anne-Marie, how do you do that? Beautiful. Volume profile, visible range. That's one of our indicators on the TopstepX platform, right? It is, let me write it, VPVR, volume profile, visible range. That allows us to see where inventory has been accumulating in the volume profile if we happen to lose the floor of support. Now, in the interim, we also have this handy dandy number sitting right at around 107-ish, 107,000. That's going to be a little sticky. Now, I'm telling you that because what we are seeing in price action is a region where if liquidity moves back into the market, we're going to have a return into this area above where everyone was consolidating with price and saying, you know what, let's hang out there for a while until we figure out what's going on. Easily, we could do that. By the same token, we could also drift down into this 107 and then deeper down into the edges. So what's the point of this? We're at a crossroads, and so when we are intraday trading in a crossroads environment, we're going to see wicks and we're going to see price action reversal that is pretty dramatic. And if we're not prepared for it, when it comes for us during the day, we're going to be caught as deer in the headlights. And so as an intraday trader, it's important when you go, okay, I see what's going to happen here. Be prepared in the back of your mind to go, okay, what if something that I completely do not expect occurs? How do I step back and position myself to engage in that formation and not continually go, all right, now I'm going to short it. Okay, now I'm going to short it. Or now I'm going to turn it on. Whatever the case is. A lot of times cognitive bias gets us and we go, you know what? I don't care what's happening there. This thing is going down. Or I don't care what's happening there. This is going up. Critical mass for us mentally to realize that this is the most important thing for us to consider. So when we position and something happens where we go, okay, I didn't expect that, we must sit down and write down, holy cow, if this happens, then it means X or Y or Z, whichever one it is. I'm going to show you exactly what I mean using the ES and the NQ. So let's jump to NQ. Oh, also, if you are a trader that spends a lot of time trading a micro, in my opinion, it is much better to use the big one, the big futures contract, the NQ, and then use your DOM if you're going to trade the MES to do that, because these are the guys running the show, right? There's a ton of volume that's moving to MNQ, but the NQ is still where big money is going to put the hammer down into specific places. Okay, so let me show you what happened in the ES on, I'm going to move all of these guys over. We'll talk about gold in just a second, because I know a lot of us do trade gold, and it's really been a remarkable trading vehicle. But for right now, I'm going to move it over to the edge, so all we can see is the ES. So my thought was the following. I am terrible at trend lines. I've talked about it a million times. I am horrific at drawing them. But they will tell me a lot about slope when I do draw them. So my thought is always, I'm going to draw a couple of them, but I'm just going to let one line give me the 2 wicks, right? So I'm just going to get 2 wicks, and I'm going to draw the line up, and it's going to tell me whether my price action has been holding in trend or breaking trend. And so if I use these guys, just like I'm sitting right here, for the last few days, you can see that several trend lines got broken if I use this action for way down here, or I use this one and I join these 2 wicks, or this one and I join this wick. All I want to see is what's happening with trend. Then I'm going to stare down big volume, and again, look at what's happening. Look at the size of the selling candles compared to the buying candles, right? Now, we know that the nature of the market is that it's generally bullish, but we've broken a lot of trend. So now the thought is, here comes October, we're going to recapture trend and move forward. Now, I actually think this is true. The question is when, right? So as the market opens right here, look at what we've got. It is opening right at an area of key resistance and support. What do the buyers want to do? They want to move it up. So the first pass, let's go all the way down to the 5-minute. Oh, wait, I need to draw a line first. Pardon me. Let's go here. Let's draw the line, and we'll say, you know what? Resistance, support. We've got our line in the sand right here. All of these are 4-hour candlesticks. Now, what did the traders do in this very big volume candle? They tried to hold it, and now they're above it. And so here's what we have. If we move above the high of the prior trading day, we are very likely to have more bullish action to push us up into the areas near 6,714 all the way to 6,725. I think that that's really reasonable. Now, what is our choice? Our choice is, hey, if it moves above that area, pullbacks, as long as they don't lose this 6,697, we're going to have bullish motion. There are traders up here that have used a lot of negative volume to push the market down, but we're sitting above the VWAP. We're sitting above that close. A lot of things telling us the traders are going to try to lift price higher. And so if we're saying to ourselves, hey, I'm ready to trade, you can easily look at this space on a 5-minute and do one of my favorite things. I look for the candlestick with the highest volume event. Normally, I like to look for the last 15 to 30 minutes of trading, right? I like to look at the 30. 15 is a great space to stare down very often. It tells us where the traders came in and said, you know what? I'm buying this, okay? So if you were staring this down and you said, wait a second, I want to trade this and I want to trade it on the cheap, what would I do? My thought would be, hey, maybe I can get anywhere to the middle of this price action event to see my first buying event. Now notice, we have a cross current in the market. The 4-hour formations give us bearish structure, right? We have a momentum indicator that's clearly negative. We have a downward average that is negative. But we have that VWAP saying, hey, let's see if we can push price to the north. A lot of people are thinking, hey, this is going to be a buy the dip formation. I'm not quite sure yet because I expect a fair bit of volatility here. And if I'm staring down all these bearish candlesticks, my thought is, you know what? I'm going to see if I can sell something at 67.03, and I'm going to put my stop at 67.07, right? I want it to bounce to the top. I want them to fail, but I believe that we are going to step down into the base of support, and that area at 66.87 will be my first buy, right? And if somehow or the other this happens to go before it gets there, I've got my range. So I position my trade. My suspicion is that we will fail here and pull back. But if I'm wrong, we will breach this area, pull back, and a brand new set of buyers are going to take us to the next ledge forward. That's just how I look at the market. Try to pace it out from that perspective. I think we've got ourselves a messy patch, but it should give us some buying pressure down towards the base of this formation. Okay, so that's the first one. Government shutdown, that usually does not affect the market in any kind of way. Thank you so much, extended trip. I like that. That's fair. Hello, Bruno. Thank you so much for being here. Yes, thank you for the risk disclosure. Listen, I'm just talking about the statistical and technical applications of the market. I am telling you what I am going to do. By no means am I telling you what to do, right? That is just the fact here. I'm just talking about how I look at the market technically. What I would love for you to do is take that away and go, now let me see how I can use what it is that she's talking about to my own benefit, right? If you're staring this down and you go, well, wait a second, we just popped up. Now, here we are. Here's our 5-minute candle formation, right? We're now under the VWAP. I had this great big wick, and I've got momentum that's just incredibly sideways. What does that tell me? It tells me I essentially have a range going around, but my trend, these two moving averages, this longer moving averages is still telling me that there are buyers sitting at the floor of the formation. Okay. Yes. Is there any change in time for D sessions tomorrow? Yes. They begin at, hang on, let me go find out. And let me go find out. Let's see. Hers is scheduled, oh, I thought it was this week. They've renamed it, but they have not named, they have not renamed it or changed the schedule yet. So hard to say. Hard to say there, folks. Sorry about that. But I think both have been changed. Okay, so let's get after it. All right, what are we staring down? We're staring down a market that is telling us we're in a buy the dip mode. We're staring the top of the range down. We know what the formation is like in general, right? So we're waiting for the topping action that will give us a chance to sit in this tight range and get ourselves a potential position in the chart. We'll see how it goes. We've got the employment numbers at the end of the week. We've got a lot of things going on this week, folks. I promise you, you are going to see a lot of wicks. A lot of wicks. And my thought is, listen, watch the volume of these bigger candlestick formations and take a look at what they're doing. This is negative volume, and they're trying to lift, and they lift, but on lower volume. So these guys are positioning or repositioning and getting themselves together. So I use machine learning from TrendSpider. They have a product called Sidekick. It's a little bit different. You've heard Barron talk about Edgeful and how much he loves it. I love Edgeful. I mean, the guy Andre from Edgeful is amazing. It's a great added tool for you to use. In my opinion, I use it. I look at it, and I'm very keen on it. But I also use something called Sidekick on TrendSpider. And I want to read to you what Sidekick said after I did the analysis on Friday. And so here's what it says. 3 things are happening. 1, there's a collar event. That means that they are positioning with short calls and short puts, but they're also taking long puts way out of the money to protect themselves, right? So they're putting the two of them together, and there's a lot of institutional rebalancing going early in late in this part of the week for early into the next quarter. And so what we saw is a lot of folks positioning at strikes that are a little bit closer to the lower end of this range, right? Very, very big deal. Now, they closed above it, but they're waiting for a magnet effect that brings the price action down into a heavy support area. That could be 6,700 for us. Okay. Then all of these institutional traders put something on in December that is a put ladder. And so what this put ladder does is give them layers of protection against their institutional holding. Then they're planning for November volatility. They've got deep in the money calls that are sitting there that give them long exposure, but they're not going outright and buying the instrument. So they're expecting price action to continue to do this sideways formation kind of thing. So overall, here's what it tells us. There's an institutional focal point down here near, they use the SPY and the SPX, but I'm going to convert those to numbers in the ES for us. In this 6,700 area, all the way down to 6,650, they are looking at volatility to come in and then begin to expand. So as we move up, they expect it to pull back. As we move down, they expect it to bounce. So for us as traders, we have to realize that there's a wide range of motion. We're going to see a lot of dips and spikes. And what we have to think to ourselves is, okay, if it breaches spike X, for me, it is the number 6,707. If I get engaged at the price action event up here, and it looks like I might get engaged here, at this 6,700, if it turns around and moves to the north, my brain should be thinking, wait a second, I have more upside before the next wick event comes, so I need to turn around and start thinking about taking a long position. The number one thing we do as intraday traders that does us a great disservice is not plan for the things we don't expect. We only plan for the things we expect. And so for me, on Friday, this happened to me. Because I was of the mind, from my 4-hour formation, as the coach at the Hive, I said, hey, listen, I know everybody's buying the dip around here. As soon as we lost that first trend line, I said, listen, bounces, they're going to be sell zones. They're going to be sell zones. And then here's what happened. On Thursday, we had a great big sell that came down into that 66.25-ish area. It's a big number, right? It's still going to be a fair support zone for us, right? Somewhere around there, 66.23, sitting at this range. But we came here at this 66.35, and then we turned around and savagely moved up. And so everybody that was short here began to immediately unwind. Now, they did not unwind all the way because we started the next day in this low area and this 6,650 zone that, again, the master, John Hoagland, called, right? That 6,650 area, he called and said, hey, ought to break down there. It's also going to recover there. In my mind, I thought, okay, we came into the day with negative 12,000 delta, meaning all the traders were sitting short. And they immediately had to unwind. And that's when we saw the rocket ship up to the moon, right? On Friday, we saw it just go zoom. It pulled back. Here's our 930, rocketed up, right? Absolutely monstrous. And then, just as everything unwound, literally, I had just finished typing to the Hive, okay, delta unwind is complete. That means all that negative price action, they were unwinding, buying to cover all the way up, and then absolutely collapsed. And I thought to myself, all right, here we go. We're going to head right back down to that 66.23. And it didn't. And instead of saying to myself, self, what if you're wrong about this? I said, no, it's going back down. And what I did was I failed to stare down new market generated information that said to me, listen, they're going to take price back up. Why? My favorite thing, what was inventory doing? Inventory was in this accumulation space. What does it mean to accumulate inventory? It means to buy in the range and not sell out of the range. So here they are buying and selling in the range all the way through, broke out, came back in, and then they broke the ledge of that 66.76. And that, my friends, was a very important gamma line, and the traders just took it up to the moon. And so for me, instead of being able to capitalize on this move up, my brain was saying, oh, this has got to roll over. Because I did not stop and go, wait a second, what if you're wrong about downside pressure? What is inventory telling you should happen? And so I share this because as a trader who tends to get things right most of the time, it sort of feeds on itself, and you stop second guessing yourself, which is something a lot of traders will do early in their career. They'll continue to second guess over and over and over and over again. They'll go, oh, what if, what about, blah, 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 blah. And the better you get at analysis and execution, the less likely you are to second guess yourself, and that gives you confidence to move. But what if you're thinking the wrong thing and you don't reevaluate based on new market generated information? And so that really is what we're staring down, this market generated information. We are out up above this zone. Let me draw Fibonacci. Man, this forgets my stuff all the time. 1.618. Yeah, that's fine. That's fine. Okay, so that's the number one thing I want to talk about there. Let's go look at the NQ. Right? We'll move this all the way over. Let's do the same analysis on this NQ event. Okay? Thoughts on not trading on the day. Fade Anne Marie's Mondays. I don't know what that means, John. Am I using delta on the, whoa, okay, so let me answer these questions in order. I am so sorry to hear that, RC. It happens. You'll get it. You'll get it back. You will. You'll get it. Looking for GC to head back to Friday's opening print. I'm not disinclined to believe that. I think that that's a fair assessment.
Order filled.
Oh, there we go. Got the order filled. Moving right up. Now, I just look to see whether I'm right or wrong. Right? Either I'm right or I'm wrong. But that's it. I don't have anything else to think about. Not fretting about anything. I say we're still bullish and we get SPY to 694. Listen, you know what, Diana? That's definitely within realm. It is. We are in the strongest quarter of the entire year. We absolutely are. What I want you to understand is that it is definitely not going to go in a straight line. It definitely is not. MES for me, weekly shutdown, I talked about that. The government shutdown is not going to matter in the markets, in my mind. All beyond rigged. Absolutely, it's rigged. Listen, all we got to do is figure out the rigging and play the game as it sits. That's it. Of course the market's rigged against the little guy. Of course it is. We should know that going in. Doesn't mean we don't play, and it doesn't mean they're out to get us, because here's the thing. They don't really care about us. They don't. They're looking at other big numbers and big moves from that perspective. So, yeah, it's rigged against us. Who cares? We're here to play. And here's the thing. We're in speedboats. They are in gigantic tankers. I can turn a speedboat way faster than a tanker can turn. And that's our secret power. But we just have to learn how to use it best, right? Are you using delta on volume profile visible range? No. Oh, you mean the setting? Yes, I believe I am. Yes, I do use delta as the volume. That is correct. So I do that. That's what gives me the wicks. It tells me where the strongest motion is sitting, blah, 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 blah. Okay. I don't know what Fade Amory's Mondays mean. I don't know if it means fade me, but you're absolutely inclined to do whatever it is that you desire. I definitely am not always right. So fade me if you desire. Deanna's segment starts at 5 a.m. Central. Thank you, Bruno. Thank you, Bruno. I appreciate that. So it 5 a.m. Okay, so it's 6 o'clock. Great. 6 Eastern. Love it. How can we say the candle has negative volume? What a great question. Okay. These are my candle bars. The candles will show gray if they're positive candles, and they'll show blue if they're negative candles. Now up here, I have them as positive candles, they're white, negative candles are gray. So my volume down here tells me what direction the candle moved in and whether it closed with a lower than its open, or it closed higher than its open. If it closed higher than its open, it's going to be gray. If it closed lower than its open, it's going to be blue, right? If that's a little, here, let's fix it. We'll do blue, and we'll do blue. And now you can see that the candles are the same color, right? Downward blue candles, that's what it's going to do, right? So does that make sense? Yeah. John. And Joe, I don't want to butcher your name, dude. But yeah. That's what I would say there. All right. Lenny says, Thoughts on not trading the days when you expect what you expect do not happen. Wait for lines that line up with your bias or don't trade. I love that, frankly. Because one of the things that matters is how confident we are in what we're doing. If we walk on a balance beam and we're not confident at all, we're going to fall off. But when we're confident, a sense of calm comes across us. If we're confident riding a bicycle, we're not going like this with the handlebars, right? And those wiggles, they show up in trading. They do. They show up in trading. So I would say, if you look at something and you go, oh, that is not what I expected, you can easily sit on your hands and wait for the next opportunity for price to be in your favor, right? Now, you want to get better, so the question is, how can you engage with the market so that every time you engage, you learn something new about it? And it teaches you about what the traders are doing. Trading is a little bit of investigative work, right? You put a trade on to see if, let's see if I'm right about this, because we don't know, right? Here is our short, right? You can see it over here. It's about, a couple points in the money. But it's telling me, hey, you are potentially correct about price action going sideways. Because that's what it's telling you. So engage, but just manage your risk. Because we're never really going to know what the market is going to do. That's the sad part. If we had a crystal ball, it'd be great. We had this conversation years and years ago. My kids were sitting with me talking, and they said, hey, if you had a time machine, how far in advance would you need to go into the future to make money? And I said, give me 30 seconds. That's all I need. But see, we can't. It doesn't matter. It doesn't even matter if it's 5 seconds in the future. We can't do that. And so there's always going to be that space where we go, I think I know what's going to happen, but the only thing I can manage is risk. And so when we get into a trade, let's have absolute control over the only thing we can have control over, and that's risk. So if you say to yourself, hey, I don't want to trade when it doesn't line up with my bias, that's perfectly fine. But if your bias is wrong a lot, because let's say you have an idea about what's happening in the world and it's decidedly negative, your bias is always going to be negative. Or if you think it's going to the moon, your bias is always going to be positive. The big event from a learning perspective is, can I hear my bias and lay it to the side, because I'm always looking at what the market-generated information is telling me. And that's where we grow as traders. Hey, I think this is bearish, but it sure is looking bullish, so I'm going to wait for the bullish break and take it. You know what I mean? Okay, let's look at the NQ, see if we can set up a trade. Take a look what happened. It looks a little bit different, right? Bullish days, big bullish, much more than the bearish. And then we have a big bearish day on the break. Let's do the same thing that we did with our trend lines. I'm going to use first, I don't know which one I want to use. Let's use this one first, right? That's our first trend line break. Then, that's the first big trend line break. So then maybe I want to use it again, but I'm going to connect it to a different wick, right? So I've got two trend line breaks here from the price action event. And so that tells me the same thing, right? I'm going to find a support zone where the traders all agree on price. And so as I stare this down, I can look to the left, right? If you wonder where price is going, if it's already been there and it's coming downward, you look to the left. So I can look to the left and I can see this area and I can go, okay, they would like 24,450 to be support, but those of us that trade the NQ, we know that these savage candlesticks can come down and rip our heads right off our necks. I mean, boom. But if we stare it down, look at where the inventory was accumulating. Inventory accumulation. That means, hey, bud, I agree like you that price ought to be in this zone. I agree. What are they going to do? They're going to come into prior areas of inventory accumulation and they're going to try and bounce off of them. You're going to be able to see the same thing if you dial in to this formation. Right? Inventory accumulates, and then they begin distribution. So if you're thinking to yourself, whoa, I think this is rotating over, and it breaks out and doesn't come back to test, you're wrong. And so you have to flip your bias from that perspective. And so that's what we have to think about. We have to think about, well, what if my bias is wrong? And so let's stare it down. We can see what's happening. Very big volume candlestick at the edge of the day, but the traders are above that zone. Now they're sitting just like the ES. They're sitting at this relative resistance, and that number is 24,750. It's been a big number, and we've seen it. Look at how many times. It was resistance all the way through here. It became support here. It was support here. It was both resistance and support here. So it's a battleground. Why? Because the traders came back into that space, and, if we're staring it down, we have inventory accumulation right there on that 4-hour pocket. It's sitting right there in that zone. So this is a battleground for traders. When it sits in a battleground, sideways trading is best until you see it flip, right? So let's go with the 5-minute. See what's happening in the NQ. Whether you trade the MNQ or the NQ, it's all the same in terms of rhythm and motion, okay? So what are the traders doing? Well, what's the moving average? It's up, right? These guys are holding their moving averages. They're trying to move higher. So dips are buy zones. And here they are. Look at this candlestick. Very big. Let's go to the 15-minute and see if we can map it out. It's right here. Now, you guys know, the ones that trade with me all the time, you know that I normally look at a 30-minute candlestick. We're just zooming in a little bit. This is my homage to Tom Hugard, which, I'm so happy that he's back doing stuff together. It's been really nice connecting with him again. And so when we stare this down, we can see, all right, there's our 15-minute. We broke above it, we broke below it, and now here we are starting a brand new day trading, and we're above the range. Now, where is resistance? Well, if we look to the left, we've got a big pocket of accumulation right here that wicks north and then gives up. And so if we're staring this one down, we might say, yeah, this one's a little bit sticky. We could put that wick there at 24,750. I am seeing a little bit of institutional rotation occurring in the Mag 7, but I don't know. I really don't know what it means in general. I don't have a good feel for it. So here's what we're saying. It's moving up, and you're thinking to yourself, well, wait a second. I can buy the dip. Here's the VWAP. Here's my moving average. They're both up. My momentum is high. It's telling me that dips are buys on that 5-minute formation. So if I wanted to buy this, I would need to wait until I got a good test of old resistance, new support, which I think is really pretty nice down here, right? And coming to the upside here, it could easily break through, right? But the question is, where's it going after that? So, and I don't know. If you like to trade 1 minute, if you like to trade, whatever you want to trade, that's totally up to you. For me, if this is running off to the rails and moving up north, I want to get in a space where I have old resistance confirming as new support. And so it's either down here at 27,730, or maybe I could do it at 27,736. But I need to have my stop there. 20 points, right? 20 points of risk for each one of those as they move to the north. Okay, now let's talk about gold. Gold is in a really interesting space. Very, very interesting. A lot of selling, big selling candles, but then all of a sudden on Friday, they really moved up. So you might go, what changed on Friday? So what we had were personal outlays, personal consumer outlays or something like that, PCE, or expenditures, personal consumer expenditures, and that relating to the percentage of X, Y, or Z that the traders are working through. And so what it said was inflation is not as hot as we expected. Consumers are still spending money. And all of that made them say, wait a second, the Fed is going to have ammunition to lower rates. And unto this time, they did not get that information until Friday when that number came out, and then everybody's moved back up into the space, right? So, what is gold telling us? Gold's telling us, hey, my dips are still buy zones. Look at this moving average down here, right? On the 4-hour formation, the price action is still very bullish. But what do we call it when price and time stop gaining to the upside or the downside, but they move sideways over and over and over again? It's called mean reversion. And so this is what I expect is happening a little bit in the price action space, right? I expect a little mean reversion, and you can see how the candlesticks have been retracing each other so much. I mean, so much. I am long the ES to 66.65. To 66.65 or from 66.65? Yep, I'm long tomorrow's ES, 66.90. I still don't understand that. What is your momentum indicator at the bottom? Oh, how kind. That's a very nice way to talk. That's lovely. This is called a Chandi momentum oscillator. You can see it, Chandi MO, right? Super smart Indian guy. You know, all momentum oscillators are derivatives of derivatives. And so they're always going to move behind what price action is likely going to do. And so you can use this. You can use a MACD, right? You can put them together, which is super cool, right? When you've got a MACD and a momentum oscillator together, you can... Okay, Fred, come on. There we go. You can put them together, put them both on the zero line, and you can see when they're both agreeing, you know what's going on. When they're not both agreeing, you sit tight and wait for them to agree. So I love to do that. It's a good way to see two indicators at once. It's a really nice feature on Topstep X that just allows you to drag them over. It's really fantastic. I love it. So, mean reversion. I remember it with an angry face because that's how I feel when I get taken out on the reversion trade. Yeah, you know, it happens. It truly does, right? Now, bonds. Well, here's the thing. I read something from Jim Bianco, super smart bond guy, and he was saying that, hey, mortgage rates have been falling since Trump moved into office. President Trump moved into office. So the question then becomes, why? Well, the long-term rates have stayed almost the same. It's short-term rates that wiggle around, right? And that's really what happens when interest rates move back and forth. So there's a lot that stands in the balance there. For us as traders, especially in the future space, we just need to see what price is doing, right? And so what price did on the last few days, have a look at this. I'm going to clone this, and I'm going to move it up to the top of the box. Listen, this is not an anomaly. Distribution, once inventory corrects, and you put yourself around that box, right? I use this old top. Here's my resistance. I use this one as my support. That gives me the range. When they begin to distribute, they like to do it in multiples. And so once you get a feel for that, you can go, look at that. My space. Now, as I mentioned, I believe that gold is going to be sideways over the next few days, right? Definitively, I believe it's going to go sideways. So my thought is, hey, it's going to sit right in those distribution boxes of 1x. It moves right up the same range, and it goes right to the top, falls right back to the bottom, and then bounces again. And here they are at the midline of the formation. And so if I'm standing around, I might say to myself, okay, what am I seeing from a 4 hour? Generally bullish pressure because I've got higher lows. but momentum is down. So it gives me a cross current. So I know that my best trades are going to be probably range-bound trades. So I'm going to stare that down. And if you're looking at it and you're going, all right, well, I know the big picture. What I want to see is, can I go short here at 3,800? And if not, if it doesn't break down there, I want to get out at 3,803. There's my stop buy, 3,803. Because I know it's coming there. Now, you might go, oh my gosh, Emery, it looks like you just missed this trade. Yeah, but I'm not going to chase it. Why? Have a gander. You see what momentum and trend look like? They're almost flat. There's literally nothing going here. If I stare this down, right, I've got some negative pressure, some positive pressure, but nothing telling me, hey, listen, chase this short. Because if I have to get out of this trade, I expect, what's that midline? Here's the edge of my volume area. I'm going to look at this and I'm going to go, you know what? If my short gets covered and I actually enter into the short, it doesn't get stopped out, chances are my support zone is going to be, I'm going to go all the way over here. It's going to give me that 37.95 zone. And that's what I'm going to stare down. Big gap up on micro Bitcoin. Really? There's my NQ. Let's look at Bitcoin. All right. And then, you know, I'm having so much fun. I didn't realize it was the end of the day. Yes. So remember the battleground they had? Remember that battleground? Here is their inventory event. Here's their inventory event. Sideways, sideways, sideways. All right. So let's take a look at the cloning and see where they're at. It's right up here. So let's do it one more time. Here is the big picture. Remember, I said, hey, if they break out of here, this is the area they're going to try and get themselves back in. That number around 112,000. I would expect that to be relative resistance. So if I'm staring that down and I'm looking at it, if I go back to my 5-minute, I should see a topping formation right here. So what is happening? See the wicks? If you went long and you said, hey, that's a nice big gap, and you went long, this would be a great place to start taking a little bit of profit, right? Take a little bit of profit. If you want to go short, you need to wait for it to stop testing brand new highs, or you simply are going to continue to expand your risk, right? Risk is going to expand. It's still pullbacks or buy zones here, but it's a great place to take profit simply because your big picture formations that you set up beforehand are telling you, oh my goodness, I knew that if they broke out of this area, they're going to come back into this zone. Because this is exactly what I said when we first started talking. I said, hey, these guys are going to come back into this area if they break out of this zone. And that is exactly what they are doing. Moving right back into the area Where should they go? Here's a volume point of control. It's not really a volume point of control. It's a high volume node. And it's going to be in this particular pocket. And if you're thinking to yourself, hey, I want to go long there, your thought should be, well, I do want to go long there, but I need to have a place where old resistance has become support. And so far, it just keeps climbing. So we need to build a little bit of structure that gives the price action what it needs. All right. So anything else? I just realized that we are well into that space where it's time for us to go. Any questions, comments, thoughts about whatever, And thank you, Kelvin. That was very, very nice. I totally appreciate the likes. You guys are awesome. I appreciate you so much. I know I can be a little bit rabid about the market because I'm just crazy about it. I truly am. I'm absolutely in love with the market. Everything about it is exciting to me. It kicks me in the head with an iron boot every once in a while. But you know what? I think all traders are a little bit of masochistic tendencies. I think we do have them. So there you have it. It's my pleasure. Thank you so much for saying I'm a good teacher. I want to be. I didn't really have a good teacher when I started. A lot of people were very unwilling to share what they knew. And luckily, we're in an environment and we're in a community where sharing is what we do all day long on TopstepTV. And so I feel very fortunate to be part of it. I feel very fortunate to get to spend time with you guys. And except for us losing the Ryder Cup, I'm super happy. Sorry. I mean, we just absolutely stunk up the place yesterday. But it is what it is. I appreciate you guys so much, so much. I really do. I really do. We got to figure out a way to have a giant meetup. I think it would be incredible if we had a giant meetup somewhere and we just all got to rub elbows with each other and, commiserate on the good things and the bad things and what keeps us going. We'll figure that out someday soon for sure. All right, everybody, take care. We've got Dakota coming up. We've got Aaron coming up. We've got Dee coming up. We're going to have an amazing week. Just manage your risk. It's the only thing you can manage. And when you see yourself, let's say you go, hey, I'm only going to lose 400 today. That's going to be my max. I'm going to do X, Y, or Z. If you see yourself step over that edge and you go, all right, I'm just going to take one more trade, just realize what you did was hit the slide at full speed. And rather than go back on your own word to yourself, say, I'm going to be true to myself. I'm going to be true to the words I gave myself. And I'm not going to do that. And just work on it day after day, a little bit at a time, manage that risk, and you will be at the top of the heap in no time, folks. It just takes effort, but focused effort. Sometimes we have effort and it's sort of scattered. We got to have focused effort, right? So be still and watch the butterflies land on your shoulders. All right, everybody, take care. I'll see you soon, and good luck with Dakota tonight.